The market is an unpredictable beast. Yet, every single trader walks into it believing they have some sort of control. That's the first mind trick, the illusion of certainty. When you take a trade, deep down you think you've cracked the code. You believe this setup is the one that will pay you big. But here's the truth. Your brain is lying to you, and it's costing you money. Think about it. Why do most traders blow their accounts? It's not because they don't know technical analysis. It's because of how their mind reacts under pressure. Every chart pattern, every indicator, and every signal is interpreted through the lens of your psychology. And the brain is wired to look for patterns, even where none exist. That's why you see a double bottom and assume the market is about to fly. Your brain takes comfort in certainty because uncertainty feels dangerous. This is a survival mechanism, and it worked in the wild when you needed to know if that rustle in the bushes was a predator or not. But in trading, that same instinct destroys you. You crave certainty. The human brain hates not knowing. So, what happens when you see a perfect setup? You feel safe. You think, this is it. This is the trade. And because you feel safe, you bet big. You increase your lot size. You break your own rules. And then the market does what it always does. It humbles you. Suddenly, the perfect setup fails. You're staring at a red screen, wondering what went wrong. The truth is, nothing went wrong with the setup. What went wrong was you. You believed in certainty where none existed. Here's the kicker. The market doesn't owe you anything. It doesn't care that you've studied for hours. It doesn't care that your last 3 trades were losses and you deserve a win. The market is pure chaos, driven by trillions of factors you can't control, but your brain can't handle that reality. It tricks you into thinking you've got an edge, that you've finally figured it out. And this illusion is why traders keep repeating the same mistakes. Now, let's talk about the second part of this illusion, overconfidence. After a few wins, your brain tells you you're a genius. It whispers, you've got this figured out. Increase the size. Go big. Don't waste time with small positions. And just like that, your ego hijacks your strategy. The wins make you feel invincible, so you stop following rules. You start skipping analysis. You ignore risk management. Why? Because you feel certain, and certainty breeds recklessness. But here's what you don't realize. Your brain is addicted to dopamine. Every winning trade gives you a chemical hit, the same one gamblers get from slot machines. You're not trading anymore, you're chasing a high. That's why most traders blow their accounts right after a winning streak. The brain says, more, 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 and you obey because it feels good. That's the mind trick that wipes out accounts faster than any bad strategy. The irony? The best traders don't seek certainty, they accept uncertainty. They know every trade is just a probability, not a guarantee. They don't marry their trades. They don't care about being right. They care about managing risk and staying in the game. That's why discipline beats intelligence in this business every single time. You can be the smartest person in the room and still lose everything if your brain keeps falling for these tricks. Now, let's flip the script. How do you break free from this illusion? The first step is brutal honesty. You need to admit to yourself that you don't know what will happen next. Not in the next minute, not in the next hour, not in the next day. Once you truly accept that, you stop gambling and start managing probabilities. You stop asking, will this trade win? And start asking, what happens if it doesn't? That's a mindset shift that changes everything. Most traders never get there. They keep chasing certainty like a drug. They look for the holy grail system, the magic indicator, the secret strategy that will eliminate losses. But let me break your heart now. It doesn't exist. Every strategy loses sometimes. Every indicator fails sometimes. Losses are part of the game. The real winners aren't the ones who avoid losses. They're the ones who survive them. If you want to stop losing money, you have to stop looking for certainty and start embracing uncertainty. That means planning for the worst-case scenario on every trade. It means risking small so a loss doesn't destroy you. It means treating every trade like just another hand in a poker game, not a lottery ticket that will change your life. Here's something most traders never think about. Certainty feels good, but it kills you in the long run. Uncertainty feels uncomfortable, but it keeps you safe. You have to train your brain to love discomfort, because that's where real trading discipline lives. The uncomfortable truth is what saves your account. You don't know what will happen next, and that's okay. Before we dive deeper, let me ask you this. Are you struggling with fear, doubt, or overtrading? The truth is, most traders don't fail because of bad strategies. They fail because of bad psychology. That's why I created my ebook, Master Your Mind, Master Your Trades. It's packed with practical steps to control your emotions, stay disciplined, and trade like a pro. If you're ready to take your trading to the next level, check the link in the description and pinned comment, and grab your copy today. Now let's continue. Think about your last big loss. Why did it hurt so much? It wasn't just the money. You broke your own illusion of certainty. You were convinced that trade was a sure thing, and when it failed, it shattered your confidence. That's why losses lead to revenge trading. You want to prove the market wrong. You want to restore your illusion of control. But all you do is dig a deeper hole, because you're trading emotions, not probabilities. Here's a mental exercise. Before every trade, ask yourself, what if I'm wrong? If your answer is, I'll lose my account, you're sizing too big. If your answer is, it's fine, it's just part of the plan, you're finally thinking like a pro. That's the difference between a gambler and a trader. One needs to be right. The other just needs to manage risk. Trading is not about predicting the future. It's about surviving the randomness. Your brain will always look for certainty, but your job is to override that instinct. That's what separates amateurs from professionals. And here's the reality check. The market doesn't care about your feelings, your hopes, or your certainty. The only thing that matters is how well you handle uncertainty. Most people will never master this. They'll keep chasing the high, blowing accounts, and blaming the market. But if you can accept uncertainty, control your risk, and stick to your plan even when it feels uncomfortable, you've already beaten 90% of traders. So next time you feel 100% sure about a trade, remember this. That's not confidence. That's your brain lying to you. And if you listen to it, you'll pay the price. One of the most dangerous psychological traps in trading is the illusion of control. This is the belief that you can predict, manipulate, or control the outcome of your trades because of your analysis, your system, or your experience. It's a comforting thought. It gives traders confidence to click buy or sell. But in reality, the market doesn't care about your confidence. The market doesn't care about your analysis. The market doesn't even care if you've studied charts for 10 years. It moves where it wants to move. Why do traders fall for this illusion? Because control feels safe. As human beings, we hate uncertainty. We want to believe that if we just work harder, learn more, and follow the right steps, we'll always get the outcome we desire. That's why beginners love strategies that promise 95% win rates, or secret indicators the banks use. These promises give them the feeling that success is guaranteed if they do everything right. But here's the truth, most traders never want to hear. You cannot control the outcome of a single trade. No matter how perfect your analysis looks, there will always be a chance that the market goes the other way. There will always be news you didn't expect, liquidity shifts you couldn't predict, and big players who move the market without warning. You can control how much you lose, you can control how much you risk, and you can control whether you follow your plan, but you cannot control the outcome. Yet, traders act as if they can. They hold on to losing trades, telling themselves, it will come back. Why? Because they believe their analysis is right, and the market is wrong. They add to losing positions, thinking they can force the market to turn around by sheer willpower, or worse, by doubling their risk. That's the illusion of control in action. And it's the fastest way to blow an account. The illusion of control doesn't just make you hold losers too long, it also makes you overconfident after a winning streak. When you win 5 trades in a row, your brain starts telling you, you've figured it out. You're in control now. That's when traders start increasing lot sizes, ignoring stop losses, and abandoning discipline. They believe they're untouchable. They believe the market is finally obeying them. And then, one trade wipes out all the gains from the last 5 wins. Think about this. Professional traders with decades of experience still lose trades. Banks lose trades. Hedge funds lose trades. These are people with access to massive amounts of information, top-tier research, and cutting-edge technology. If even they can't control the outcome of every trade, what makes retail traders think they can? This illusion also shows up in how traders approach strategies. A trader tests a strategy and gets good results for 2 weeks. Suddenly, they think they've found the Holy Grail. They tell themselves, as long as I stick to this system, I'll win forever. But then the market conditions change. Volatility increases, trends disappear, or liquidity dries up, and the strategy stops working. Instead of accepting that they were never in control, they start tweaking the strategy endlessly, adding more indicators, creating complicated rules, all in the hope of regaining that false sense of certainty. Here's what you need to understand. Control in trading is an illusion. You can't control outcomes, but you can control processes, and that's where the real power lies. Risk management, discipline, and emotional control are the only areas where you truly have control. You can decide to stick to your stop loss. You can decide to only risk 1% of your account on a trade. You can decide to follow your plan even when your emotions are screaming at you to do the opposite. That's real control. But most traders don't want process control. They want outcome control. They want to predict the future. That's why they spend hours looking for the perfect entry or jump between strategies every week, convinced the next one will guarantee profits. They're chasing certainty in an environment where certainty does not exist. The market is built on probabilities, not guarantees. If you can't accept that, you'll always fall for the illusion of control. And here's the kicker. This illusion doesn't just hurt your account, it messes with your mind. Every time the market proves you wrong, your ego takes a hit. You start questioning your intelligence, your skills, even your worth as a trader. You feel frustrated because you thought you were in control, and now the market is laughing in your face. This frustration leads to revenge trading. You try to win back what you lost to prove that you're still in control, and that's when the spiral begins. Bigger losses, more frustration, more desperate trades. So how do you break free from this illusion? First, accept reality. You will never control the market. You will never control the outcome of any single trade. The only thing you control is your behavior, your risk, and your mindset. That's it. Once you accept this, trading becomes easier. Losses stop feeling like personal failures because you realize they're just part of the game. Wins stop making you overconfident because you know they're not proof that you control the market. They're just the result of probabilities playing out in your favor. Second, focus on the process, not the outcome. Before you take a trade, ask yourself, is this trade following my plan? Am I risking the right amount? Am I emotionally stable? If the answer is yes, then take the trade and let go of the result. Whether it wins or loses doesn't matter as long as you executed correctly. That's what professional traders do. They judge themselves on execution, not results. Finally, remind yourself every day, the market owes you nothing. It doesn't care if you've had 5 losses in a row. It doesn't care if you need money to pay rent. It doesn't care about your feelings, your plans, or your dreams. It moves where it wants to move. The sooner you accept this, the sooner you'll stop fighting the market and start flowing with it. Because here's the truth. The traders who succeed long-term are the ones who give up the illusion of control. They don't try to predict every tick. They don't expect to win every trade. They understand that their job is not to control the market, it's to control themselves. That's the ultimate mindset shift. The market is a storm, and you're a sailor. You can't control the wind or the waves, but you can control how you set your sails, how you steer your ship, and how you react to changing conditions. Most traders try to control the storm, and they sink. The wise ones focus on their own ship, and they survive. So the next time you feel the urge to force a trade, to hold a loser, or to double down because you know the market will turn around, stop and ask yourself, am I trying to control something I can't control? If the answer is yes, step back, because every time you fight the market, you lose, and every time you let go of that illusion, you move closer to true mastery. Every trader likes to believe they are in control. They believe that with enough analysis, enough indicators, and enough time staring at charts, they can predict what the market will do next. This illusion of control is one of the most dangerous mental traps in trading. It creates a false sense of certainty that blinds traders to the randomness of the markets. Markets do not operate in a way that guarantees outcomes. They are driven by countless factors: economic news, geopolitical events, institutional orders, liquidity shifts, and even retail traders like you. Believing that you can control the market because you've found the perfect setup, or because your strategy worked yesterday, is a setup for emotional and financial disaster. Here's the truth. You can only control two things in trading: your actions and your risk. Everything else is out of your hands. Yet, most traders spend 90% of their time obsessing over what they can't control: price movements. They tweak strategies endlessly, jump between timeframes, and chase the next holy grail system, thinking it will finally give them control. But the market does not care about your system, your analysis, or your confidence. It will move where it wants to move. The illusion of control shows up in many subtle ways. For example, you take a trade based on your analysis. Price moves against you, and instead of accepting your stop loss, you widen it. Why? Because you think you can manage the trade better than the market. You think, it'll come back. I just need to give it more room. But what's really happening is you're trying to control an uncontrollable situation. The market is telling you something, but your ego is louder. Another example is adding to a losing position because you believe you can average down and recover faster. This is a classic mind trick. You're not being logical, you're trying to force the market to agree with you. The desire to control the outcome becomes so strong that you risk blowing your account just to be right. This illusion also creates overconfidence after a winning streak. When you win several trades in a row, you start believing you've figured it all out. You think, I've cracked the code. I'm in control now. That's when traders increase position size, ignore risk management, and trade recklessly. But then, one losing trade wipes out days of profits because you believed the illusion. The market is probabilistic, not predictable. Every trade has an uncertain outcome. No amount of analysis can guarantee success. The sooner you accept that, the sooner you'll stop trying to control what you can't, and start focusing on what you can: your risk, your emotions, and your discipline. Let's talk about why this illusion is so powerful. Human beings crave certainty. Our brains are wired to seek patterns, to make sense of chaos. When we find a pattern that worked before, we anchor to it and believe it will continue working. In trading, this is deadly because markets constantly change. A setup that worked last week might fail this week. If you cling to the belief that you can predict or control outcomes, you'll keep making the same costly mistakes. The illusion of control is amplified by technology. Modern platforms give traders tools that make them feel powerful: charting software, automated strategies, news feeds, social sentiment indicators. These tools create the perception that more data equals more control. But more data often leads to more confusion, more second-guessing, and more impulsive trades. The way out of this trap is acceptance. Accept that you cannot control the market. Accept that losses are part of the game. Accept that even the best setups will fail sometimes. When you accept uncertainty, you stop fighting it. You stop over-trading because you realize you don't need to predict every move to make money. You just need to manage risk and stay consistent. Think about the professional traders who last for decades. They're not control freaks trying to predict every tick. They're risk managers. They know they will be wrong often, but they don't let one trade define them. They place a trade, define the risk, and let the market do its thing. If they lose, they move on without emotion. If they win, they don't celebrate like they've conquered the market. They know the game never ends. Here's the hard truth. The moment you let go of control is the moment you gain it. Not control over the market, but control over yourself. And that's the only control that matters. When you stop trying to manipulate outcomes and instead focus on managing your process, your entire trading experience changes. You'll no longer feel the urge to widen stops, to revenge trade, or to double down on losers. You'll no longer feel crushed after a losing trade because you expected losses as part of the plan. You'll stop chasing perfection and start aiming for consistency. The market will always be bigger than you. It will always do what it wants. But if you can control your actions in the face of that uncertainty, you win. That's the difference between amateur traders and professionals. Amateurs think they're in control. Professionals know they're not, and that's what makes them successful. So the next time you feel the urge to force the market, pause and remind yourself, I control my risk, not the outcome. That simple truth can save you thousands of dollars and years of frustration. The truth is, most traders lose not because the market is unbeatable, but because their minds are. The battle isn't against the charts, the news, or the brokers. It's against impulses you don't even know control you. And one of the most dangerous impulses is the need for control in a place where you have none. The market is chaos, disguised as patterns. It moves where it wants, when it wants. But traders can't accept that. They want certainty, they want guarantees, and when they don't get them, they fall into a spiral of destructive decisions. You've seen this play out before, maybe even lived it. A trader takes a loss. It's just one trade, but to the mind, it feels personal. The ego kicks in. Suddenly the loss isn't about the money, it's about identity. I can't be wrong, you think. And so you take another trade, bigger this time, because you're not chasing profit, you're chasing redemption. That's revenge trading, and it's one of the most expensive mind tricks you'll ever fall for. You convince yourself that the market owes you, that you're just one good trade away from being back on track. But the truth? The market doesn't care about you. It never will. And the moment you believe it does, you're finished. Then there's the illusion of safety. You think if you add more indicators, watch more videos, follow more signals, you'll find certainty. You won't. You can layer your screen with 20 different tools. But the reality is, no indicator can predict the future. Yet traders keep believing it. Why? Because it feels better to pretend you're in control than to admit you're not. The human brain hates uncertainty. It craves patterns, and when it can't find them, it invents them. That's why you stare at a chart long enough and suddenly see perfect setups that aren't really there. The brain is tricking you because it needs to make sense of the chaos. And that false sense of control is what drains accounts every single day. Another mind trick? The fear of missing out. FOMO is so powerful it can turn a disciplined trader into a gambler in seconds. You see a big move happening, you weren't in it, and now you feel the pressure building in your chest. What if this is the move of the day? What if I miss it? So you jump in late, you don't check your risk, you don't follow your plan, you just hit buy or sell because the fear of being left behind feels worse than the fear of losing money. But here's the truth. Missing a move never kills an account. Chasing one does. Every single time. And then comes overconfidence. The most dangerous state a trader can be in is after a winning streak. One win feels good, two feels better, and after 5 in a row, you start thinking you've cracked the code. That's when the brain whispers the deadliest lie, you can't lose. So you increase your lot size, you take trades you wouldn't normally take, you stop respecting risk because, after all, you're on fire. But here's what happens next. The market humbles you. One bad trade wipes out all your gains, maybe even your entire account. And when that happens, the same mind that was overconfident now falls into panic, and the cycle of bad decisions starts again. Winning streaks don't just boost confidence. They create a dangerous illusion of invincibility, and the market punishes arrogance every single time. Let's talk about the comfort of hope, another mental trap. Hope is the most expensive emotion in trading. When a trade goes against you, hope keeps you in. You tell yourself, it'll come back. You watch your stop loss get hit, or worse, you move it because you can't accept being wrong. That's not strategy, that's denial. And it destroys traders because the longer you hold on, the deeper you sink. You're not analyzing anymore, you're praying to a market that doesn't answer prayers. If you've ever held a losing trade for hours, watching it bleed while whispering, just a little more, you've fallen for the hope trap. And you'll keep falling until you understand this. Hope has no place in trading. Discipline does. Then there's the need for action. Some traders can't sit still. They believe they have to trade every hour, every session, every little movement. Doing nothing feels wrong because it feels like missing out on money. But the truth? Doing nothing is sometimes the most profitable move you can make. The best trades often happen after long periods of waiting. But the mind hates waiting because it equates waiting with losing. So you force trades that aren't there, you turn noise into signals. Here's the harsh reality. These mind tricks never go away completely. They're hardwired into human nature. The market exposes them because it pushes your emotions to extremes. Fear when you're losing, greed when you're winning. And unless you learn to master yourself, you'll always be a victim of these traps. That's why successful trading is less about predicting price and more about predicting yourself. Can you trust yourself to follow your rules when the market tempts you? Can you walk away when your brain is screaming to trade? Can you cut a loss without hesitation, even when every part of you wants to hold? That's what separates traders who survive from traders who blow up. The mind loves to lie because it wants comfort, not truth. It wants certainty where none exists, control where none is possible, and success without sacrifice. And every time you give in to those lies, you pay the price. The good news? Awareness is the first step. Once you recognize the tricks, you can fight them. You can pause when you feel the urge to chase. You can step back when hope starts whispering. You can remind yourself that the market owes you nothing, and you owe it discipline. Every trade is a battle, not against price, but against the part of you that wants to sabotage everything. Win that battle, and you win the game. The biggest lie traders tell themselves is that they can control what happens in the market. You open your charts, draw your trend lines, mark your zones, and feel like you've figured it all out. You start thinking that if you analyze enough, if you study hard enough, if you find the perfect strategy, you can predict exactly what will happen next. It feels good to believe that. It feels safe. But it's an illusion, a dangerous one. The market does not care about you. It does not care about your analysis, your signals, or your strategy. It moves how it wants, when it wants. News breaks without warning, liquidity spikes out of nowhere, and price can reverse in a second. No matter how good you think you are, you cannot control that. Yet your mind hates that truth, because the human brain hates uncertainty. It wants patterns, it wants security, it wants something to hold on to. So, it creates the illusion of control. It tricks you into thinking that because you've seen a pattern before, it will happen again. It convinces you that if you work hard enough, you can make the outcome go your way. Here's the reality. You cannot control the market. You can only control yourself. But most traders never truly understand this, and that's why they fail. They confuse preparation with power. They think because they've done their analysis, the trade should work. They think the market owes them something for all the hours they've studied. So, when the market does the opposite of what they expected, they take it personally. They get angry. They start forcing trades, trying to fight back, trying to win. But the more they try to control the outcome, the faster they lose. Have you ever had a winning streak and suddenly felt invincible? You think, I've mastered this game. You increase your lot size, you stop following your rules, you take trades you wouldn't normally take because you believe you've cracked the code. And for a moment, it feels good until the market humbles you. One bad trade wipes out 3 days of profit. One impulsive move takes you back to zero. You sit there in shock, wondering what just happened. What happened is simple. You fell for the illusion of control. The illusion makes you believe you know what will happen next. It makes you think you can predict the future because you saw a setup that worked before. But the market does not repeat perfectly. It rhymes, yes, but it never guarantees anything. Every trade is unique. Every candle forms in an environment that is slightly different from the last. That's why no system wins 100% of the time. That's why the best traders talk about probabilities, not certainties. When you fall for the illusion of control, you start breaking your own rules. You hold on to losers because you believe the market will come back. You remove your stop loss because you think, it can't go lower than this. You double your position because you're sure the next candle will reverse. But every time you do that, you give away the only real control you have. The control over your risk, your decisions, your discipline. Control in trading is not about predicting the outcome. It's about controlling yourself regardless of the outcome. You cannot control whether the trade wins or loses, but you can control how much you risk. You can control whether you stick to your plan or let fear and greed take over. You can control whether you stop trading after a loss or chase the market out of anger. Those are the things that keep you alive in this game. But most traders ignore them because they're too busy trying to control what they cannot control. And remember, growth is not a one-time escape from comfort. It is a lifelong process of deliberately putting yourself in uncomfortable situations, again and again. The moment you stop, comfort creeps back in, quietly and invisibly, until you wake up one day wondering where all your dreams went. So, ask yourself this. Are you truly stuck because of your circumstances, or because you have built a comfortable prison and convinced yourself it is freedom? Now I want to hear from you. What's one comfort you know you need to give up right now to finally move toward the life you want?